Let's talk about an escrow analysis and what that is, what it means, when there's a refund, when there's a shortage. This is something that happens once a year. So at least in Texas, I'm going to speak to Texas. Other states can be slightly different, but the concept and what happens is fundamentally the same. So first and foremost, an escrow account. An escrow account is that piggy bank, and it's not all mortgages have an escrow account, but the ones that do, and to have an escrow account means that you pay your property taxes or a portion of your property taxes and your homeowner's insurance every month. So that's part of your mortgage payment. That is your escrow account. The escrow account is the piggy bank that the mortgage company or mortgage servicer holds where all that money goes into. So once a year, there's what's called an escrow analysis. This usually happens around the first part of the year in Texas. So call it February, March time period. And so a mortgage servicer will look at this account and say, that looks pretty good. We're A-okay, right? And everything's fine. But let's take a scenario. Maybe the property value went up, which is really good, right? That's really good. Here in Texas, maybe the homeowner's insurance went up. That's bad, right? Because of all the crazy weather we have, insurance gets more and more costly. So as the house increases in price, there's a likelihood that your property taxes go up and cost you more money. Likewise, as insurance goes up, the cost of insurance goes up. But your payment from when you closed on your mortgage has this set escrow account balance. So every month when they collect this payment, that's fine, that's fine, that's fine. After a first year, now if insurance goes up and taxes are up, your escrow company is still going to write the check, but they now check and say, oh man, look at this. Did you know that taxes are more, cost more and the insurance costs more? So they then send what's called an escrow analysis to the homeowner. So usually these letters show up around the March time period in Texas. So again, every state is going to be different, but in Texas. So the escrow analysis basically just says, hey, we're good or we're not good. And sometimes you're not good in a good way where there's too much money, but most of the time it's a shortage. So let's talk about what that is. So the statement's going to come out and say, hey, guess what? The account's right on, spot on, and everything stays the same and your payments continue to what you know them to be. That's the quote normal scenario. Another scenario. So what happens is they can come to you and say, hey, guess what? We noticed your taxes went up or your insurance went up or both, doesn't matter. And now there's an escrow shortage. So let's take this scenario. Let's pretend that the combination of your taxes and your insurance went up by $1,200 a year. So, and that's $100 a month. That's why I'm trying to make this easy math. But let's say that they had this piggy bank, and whenever the taxes came due, whenever the insurance came due, they wrote the checks and paid it off, because they're always going to make sure those things get paid, even if there's a shortage. They're going to say, hey, we're going to pay the property taxes and we're going to pay the homeowner's insurance company. So they pay those. So during this escrow analysis, they're going to say, yo, we got a shortage. We see that basically it's a $1,200 annual increase. So that means moving forward, your payment is going to go up $100 a month. So that's step one, is they're going to say it goes up so that way they can keep pace with the now new normal amounts. However, by the way, Mr. Homeowner or Miss Homeowner, there is now a shortage of the $1,200 we just had to pay beyond what we were expecting. So they will then typically give you two options. One is going to say, hey, guess what? Yes, your payment's going up the $100 to account for this, but now we're also short that $1,200. And they're going to say, guess what? You now owe us another $100 a month for the next 12 months to put that money back. So in this case, your payment would go up for $200 for the first year, right? Because that first one of the $100 goes to pay the new amount. That's the proper amount. It should go up. And the other 100 is going to catch him up from being short. So I put down, and truthfully, I think down here in my example, I used a $600 increase. But down below, there's examples of that in this blog or the link somewhere that you're going to find this. So when that comes up, that's one option, is they're going to say, hey, your payment now goes up $200 in my example. Another option they're going to say is, hey, maybe you don't have the $200 a month, or maybe you don't want to do it, and maybe you have $1,200 sitting in your checking account. The other option they give you is you could just write the check to catch them up, and then moving forward, you pay the normal extra $100 a month. So this does happen a lot with new home construction. And the reason being is a mortgage lender, not us. The Mortgage Mark team is absolutely has these conversations up front. The way we recommend structuring it is what we consider the right way. But if you're working with somebody or somebody doesn't have this conversation, a lot of home buyers that buy new construction, the taxes can come and sneak up on them, where this is a big deal after the first year. So just be aware of that. And if you know somebody buying new construction, make sure they're having a conversation. They can call us. We'll certainly help answer their questions, whether we do the mortgage or not. So that's what they do. They typically give you two choices when there's a shortage: write a check up front to catch them up, and then obviously the payment goes up. Or two, if you don't have that money to pay up front, they'll tack on the difference for 12 months to get you caught up, and then you move on. The other thing, the good thing I said, if you can, when they do the escrow analysis on rare occasions, it can happen, but rare occasions, let's say you switched insurance, your insurance went down. Let's say your city voted to reduce taxes. Cool, maybe your taxes went down. In the event that they come in and they analyze this, they're going to realize they have too much money because, guys, this is regulated by the federal government. Like there's a formula that says to the penny, this is how much they have to have. It's not like I think, I hope, I feel. It's like, here's how much they're allowed to keep. And so they will then issue a refund. That's rare, but it can happen. And then lastly, something I think it's worth noting is there was an example, and I've been doing this for over 2 decades, and we've done thousands and thousands of loans. So realize the story I'm about to say is one example out of all of those that I've ever heard of. But there was an instance where a mortgage servicer, not us guys, caught a check to a home buyer that says, hey, here's, I think it's like $7,000 or something stupid, really big number for the taxes and insurance. And so the homeowner called me. It's like, what do I do? I said, do nothing. Like hold that money, but do not spend it. Keep it in your account. They're probably going to notice. And even if they don't notice, eventually, when they do the escrow analysis, they're going to want that money back. Sure enough, about 4 or 5 months later, they did the analysis. Hey, we're $7,000 short. So a very thankful homeowner called me to say, thank you. I was right. They took the money back. Because remember, guys, they will pay taxes. They will pay insurance. Don't let somebody goofy doing something goofy screw you up. So ultimately, that is what an escrow analysis is the annual part where they basically just make sure they have the right amount of money, not too much, not too cold, the Goldilocks amount. And again, if you have questions or need something, reach out to us. Again, whether we did the mortgage or not, we're here to help, make sense of things, and answer all your questions. I hope you have a great day and you don't have a shortage at any point in time. But when you do, it usually just means maybe your house got more expensive and more value. So that's a good thing. But have a great day and call us if you need us.